Now, a CNBC-TV18 news break confirmed. EdTech giant BYJU has announced that its board has given its approval to launch the IPO of its subsidiary Aakash Education Services Limited mid-next year. BYJU had acquired Aakash Educational Services in April 2020 for nearly $1 billion in a cash and stock deal. A BYJU insider had already revealed to CNBC-TV18 in April that Aakash Educational Services would hit the public markets in the next 12 months. The firm added that the appointment of the merchant bankers for the IPO will be announced and the listing will provide a significant capital infusion to bolster Aakash's infrastructure and broaden its reach, it added. When CNBC-TV18 reached out to BYJU for a comment on the offer size, the company said, and I quote, "No comments on this at this point. We will be sharing these details once the bankers get finalized," end of quote. Now, BYJU further announced that Aakash has been clocking a threefold increase in revenue in the last 2 years. AESL's revenue is on track to reach 4,000 crore rupees with an EBITDA of 900 crore rupees in the fiscal year 2023-2024, the EdTech giant claimed. In fact, just last week, BYJU's lenders scrapped talks to restructure its $1.2 billion loan shortly after they moved to Delaware court, accusing its U.S. subsidiary Alpha of hiding $500 million. Lenders have said they can now sell the Term Loan B securities of the firm as a restraint that came as part of the negotiations is lifted. BYJU, on its part, has not commented, even as it continues to assert that it did not violate any part of the agreement and fulfilled its payment obligations. To repay the loan, BYJU has been trying to raise a $1 billion in structured debt and equity. BYJU has also seen valuation markdowns at the hands of select US-based investors since last year. On May 31st, BlackRock, a minority investor, cut BYJU's valuation for the second time since October to $8.4 billion. The company's last reported valuation stands at $22 billion. Moving on, also on what's brewing, and